Hey, wealth creation with options traders and investors. Matthew Buckley, your chief investment strategist and model portfolio. My apologies for having to cancel today's webinar. My son, we're out here in Vail, Colorado on spring break, and unfortunately, a couple days ago, had a pretty bad fall and did some good work to his spleen, and he's been in the ICU for the past couple days. So he might be getting released today. So obviously, family comes first. Obviously, I got my computer, got my phone. I've been trading nonstop. I never don't work or trade, but obviously family comes first. So I wanted to knock out a quick video to do a portfolio review of our existing positions, especially since we got expiration coming up on Friday. So let's go through our model portfolio real quick. Real good trades on Brazil, folks. Our Brazil bull put spread, we had 50 of these, the 38.40 bull put spreads, 18.50. We are at max profit on this trade. We got another $300 to go with a 90. Yeah, another $300 to go in this trade by Friday. Staying in it, nice gain on that trade. Here's our long call diagonal, being long, or I'm sorry, this is synthetic stock. We're synthetic stock at the 43 strike. We sold the 42 calls. EWZ's at 41 and some change, so those 42 calls will go out worthless on Friday, most likely. No changes to that trade. Got a couple of our AIG trades that have recovered. AIG got kicked in the gut recently, but has recovered nicely. Here's our synthetic stock position at the 43 strike. We sold the 52.5 calls. This trade's up $1,400. No changes to that one. And here's our long call diagonal. We're long 5 of the Jan 16 35 calls, and we sold the 52.5s, just like the just like the synthetic stock. These will go out worthless by Friday as well, so no worries with our AIG trade. XLF, we have our long call diagonal on this trade, looking great, up nearly $3,000. We're long out to January 2015 at $16. We're short the 22s right now. We're at 22.14, and the Fed chief is coming out here in a little bit to make an announcement. I'm going to wait because I think we might see a sell on the news with the Fed announcement here at 2:00. So either way, I'm gonna close these calls out by Friday. So plan on closing these short XLF, 15 of them, 22 calls in our long call diagonal. Okay, I'm going to wait a little bit because I think the XLF may take a little bit of dip if we get a sell on the news event with the Fed. We have a long call diagonal here. Synthetic stock. Man, it's the altitude. Synthetic stock at the 115 strike, and we're short the 130s. Gold had a nice run up into the mid 130s and has given a lot back, as I guess Putin said he's not going to take over the world yet. So this trade's fine, up about a grand. Here's our long call diagonal out at the 130 strike, and we sold 2 of the front month here, so that one's fine. So no changes to the gold trade. FXI, our China trade, we're long out at the January 15 at the 30 strike, and we sold the 36.5. This trade's fine. Down about $2,200 with the Shanghai getting kicked in the teeth recently with some credit and housing issues. I'm not too worried about China. I think they took over the world eventually, as you know. Here's our bull put spread. This was a hedge on SDS. 70 of these. Obviously, the bull call spread is worthless. Let's go ahead and close this out right now and take our losses. But again, this was and you know what? I'm going to wait just a little bit and close this out after the Fed announcement. Hell, maybe we get a couple $100 if the market, if it's a sell in the news and the market tanks. So get ready to close that SDS trade. Again, I don't look at this as a loss. It's the cost of doing business, folks. It's insurance. It makes money when the market goes down, and we need that on. Hell of a trade on Apple, man. Our Apple Iron Condor went right down the fairway. Look at that, $2,800 gain. Love it. Love the Apple trade. VIX, bullish double vertical out to April. This is a good trade. Hang on to this because I'm seeing reports today of Putin actually, or Russian forces, or quote-unquote just dudes in uniforms attacking Ukrainian bases in eastern Ukraine. So here we go. Get ready for a potential spike in volatility. This trade's only down $750. I don't care. It's a hedge against a spike in volatility between now and April VIX expiration. Our EWJ trade, the Nikkei's been all over the place, folks. So we sold this bull put spread, and this one's going to go out for max profit. We sold 50 of those puts right there, and this is our. I'm sorry, actually, this whole thing together. Let me group it together. It's easier to look at that. It's a synthetic stock position. So Let's get this puppy with its family. There you go. There's our synthetic stock. Voila. Okay. And we sold all the way out to April the 12th, so they're not in danger. I'm fine with Japan. Either this trade it goes horribly. I actually have a trip at the end of next month out to Tokyo and Hong Kong to work with Macquarie Financial. So I'm actually going to be putting eyes on Japan and China, Hong Kong. So I'm not worried about any of that stuff. Our Google bull. Let me open our Google multiple trades here. This was a bullish, excuse me, bullish double vertical. The bull call spread didn't work out for us. This bull put spread is working out for us. Great. It's up $1,000, and we got about $1,500 to go by Friday. And this trade, man, I'm short the 1200-1205 bull put spread, only down $450 right now. Goog's at 1206. So let's take a look at our break even here. Break even is below where we are right now, 1203.40. 56% probability of that. I'm holding this till Friday, okay? If Google declines through 1205, I'm going to get out of this trade, okay? And it'll still be for a profit. So that's my guidance there, guys. If we get through 1205 with any sort of airspeed, let's go ahead and get out of this trade and take our profits, okay? And then we'll talk about a new trade next week on Google because I think it's doing really well. So net. Going into expiration, pretty happy with what we're doing going into expiration. We're essentially flat for the month, down $100. And in this market with the invasions and everything else, I think that's pretty fair performance. To be honest with you, since February 1st, how are we doing since February 1st? Up $9,300 since February 1st, so that's pretty good. So we had a hell of a February. March has been pretty interesting, obviously, with invasions and non-invasions and crazy stuff going on, and we have a Fed announcement coming up here. So I got to jump off because I want to listen to the Fed. So there's only a couple trades that we might need to adjust by Friday, and I'll let you know what those are. Okay, so again, apologies. I got to run. I'm going to be watching the Fed announcement on my phone as I'm taking the shuttle over to Vail Regional Medical Center to see my oldest there, and kind of breaks my heart that this is his spring break. But we'll be back normal time next week, folks, at 1300, 1 p.m. Eastern, with our Wealth Creation with Options webinar. So have a great rest of your week, folks, and I'll talk to you next week. We'll see you.